Hi, welcome to the Market Alert for Thursday the 23rd of March 2017. So yesterday the market opened, traded sideways. We then had a couple of sell signals. The market hit the scalp, and at this point, instead of taking the profit, I decided to see if the market would continue back to the downside. So I moved the stop to break even and then just left it to see how it would go on. So let's just fast forward. So the market came back. I thought it was going to be stopped out, but then it dropped back down, and then we're waiting for the crude oil figures. The market moves lower, so what I've done is move the stop below break even now to try and start locking in a few points. And at this point here, I'll just bring it back a bit. You can see there's 32 points on the table at this time, and then we see the market back below the 20,600 level, which is this level here. You see it there, and then move the stop again, and there you'll see it being taken out as the market came back ready for the crude oil figures, which were released at 2:30, which is the pink line there. So then the crude oil figures come out. We get a sell signal on the news, and always want to give it time to sort itself out following the news. And the interesting thing here, if I can just scrub along the timeline here, I actually did look at the crude oil figures. Let's see if they will appear. So crude oil figures, you can see me refreshing them. They came out at 5 million surplus, forecast at 1.9, previous minus 0.2. Very interesting, because this should be negative for crude oil, and then we see the market move higher, which is why you should give it time to actually sort itself out. And then after that the market traded sideways, moved higher, taking out the 20,650, then coming back with the terror incident in London there, and then the market trading just sideways and in a range. We had another sell signal later on in the evening session that went down to the scalp, and that's as much as you got before prices turned around and moved back to the upside later on in the session. The last two trades I didn't do. I was out wishing a friend birthday wishes, so I wasn't at the desk at that point, but there was another two trades there which I probably wouldn't have done had I been at home either, given the terrorist situation in London. You never know what's going to be uncovered and the knock-on effect, but ironically the market seemed to have become used to terror attacks following obviously the 9/11 incident. Since then the markets don't really react anymore, which rather strange. It's a terrible state of affairs when a market is used to such events and it becomes commonplace. A very strange world we live in. And let's have a look at the daily charts. An interesting picture here. We've got a situation where if you look at the volume, I'll just grab a pen. You can see that on this bar we've got some selling, and we've got more or less the same volume on this bar. So there's some support coming into the market. Otherwise prices would have just moved straight to the downside following the same amount of volume in this bar. There's no doubts about it. If there wasn't any buying contained in this, then we would have had another down day like this, but we didn't. So we know there's some buying around in the market there. So a bit of support at the moment. The market's struggling to move a bit higher at the moment, but there's some support in here at 20,587 and then 527. So we'll see what the market does, but certainly still weak at this time. We've got Yellen speaking today, 12:45. Now it's going to set the cat amongst the pigeons, so that's what the market's going to be waiting for. Fortunately, this will all be out of the way by the time the market opens at 1:30. New home sales at 2 p.m. before the market opens. Half an hour after the market opens, and then we've got Kashkari and Kaplan speaking later on this afternoon as well, 4 p.m. and then 11 p.m. when the market will have closed. So might give the market a bit of a kick today. We'll see what they have to say and how the market reacts. On the implied volatility front, well, we've got an increase to 10.11. You can see how this is moved up during yesterday, which is quite odd really, given the fact that the market was supported by the so-called buying volume. So an interesting picture here, and again you can see how narrow the range was. So interesting that the implied volatility would rise from the previous day of I think it was 911, wasn't it, something around that area, but a big increase considering the volatility. But then if you factor in the so-called terrorist attack in the UK, maybe there's a pricing in that way, as opposed just to the price action there. There's other external and mitigating factors there. So that's really it for this morning's market alert. There's not a lot else to report. The market's certainly starting to look weaker. The optimism's disappeared. The Trump honeymoon is out of the way, so it's just a matter of time before things start to fall apart, as it were. And certainly you can see that they're attempting to hold the market. If you look at the daily chart with the tick volume, just go back to that, you can see with the tick volume, and in the end of day charts, an interesting picture here as well, because on the day that we saw the selling, which is this bar and this volume bar, it's interesting that there wasn't any selling of the major stocks. It was as if they were marked down. So it'll be interesting to see when the volume figures are released today for this bar, to see if there's a big spike to show real buying coming into the market. So again, we'll have a look at that in tomorrow's market alert once it's been released. Right, that's it. I will see you in tomorrow's as ever. Thanks for watching.